Hey, thanks for tuning in to the Art of SBA Lending. Today in the podcast, we have Matthias.Smith, founder of Pioneer Capital Advisory, an SBA advisory firm that works with entrepreneurs to provide them with access to 7A capital. Now, if you recall, Matthias was on the podcast last June, right after he left his job as an SBA loan closer to become a loan broker, something that I don't think has ever been done before. So we caught up with him to see if his decision to jump into the deep end and pursue entrepreneurship was a good decision or a bad decision. So stick around and we'll find out. Matthias, welcome back to the podcast.
Ray, it's great to be back, my friend.
So this is your second time on. I just want to do a little recap for the listeners because we had you on last June and you had exited your role as an SBA loan closer, which you were doing that at a few different banks for what, like 8 or 9 years?
7 years and 2 months to be exact, my friend.
Okay. And so you left, you wanted to go build your own business, with your SBA advisory firm, Pioneer Capital Advisors. How's it been going?
It's been good, Ray. Yeah, Pioneer Capital Advisory. So I've got things started last May. Have been in action since then. I know we closed a handful of deals together over the last, I'd say 6 months or so. It's been off and going. So it has been better than anticipated.
Really?
Yeah.
So let's recap. Do you know how much volume you've closed since going out on your own?
Yeah. So last year alone, I did about $14 million in the 6.5 months, kind of plus minus while I was in operation. And the first 2 months of that, Ray, was just kind of getting my name out there into the market to let people know who I am and what I do. Wow.
I mean, yeah, I would think that you wouldn't have closed a loan at least in the first 90 days of building it. So that all, I'm guessing that all probably came in Q4.
Yeah, most of it was Q4. I had one that closed in September of last year, but yeah, the tail is certainly in Q4, Ray, to your point.
So 14 million, while you're ramping up, how does that number compare to a typical BDO's annual volume at the shop where you left, for example?
Yeah, so most of the BDOs that I was working with, I think they were doing somewhere between 10 million. I mean, the top guys were pulling down 50, but I'd say 12 million, 14 million plus minus.
Okay. So just to give some context there. So that's interesting. I mean, it sounds like it's been successful in that standpoint. Financially, was it a good decision for you?
It was, Ray. So it was a good financial decision last year. I made more than I would have had I stayed in my W-2 jobs. And I also am on track to do substantially better this year.
That's amazing, dude. So so it's working. I mean, that's crazy because I deal with a lot of loan broker folks who get into it and are new, and it takes them a year to close one SBA loan, or two, just to gain traction. And it's a long ramp up period. You've never done it. You had basically no clients when you left. You, were basically a behind the scenes employee at a bank that decided to go into sales and entrepreneurship. How do you get customers?
The primary funnels I've had, Ray, have been social media, specifically Twitter and LinkedIn. And a lot of it has basically been kind of through the combination of threads, GIFs, or short Twitter posts, sharing the value add of kind of working with someone like myself to help quarterback the financing process, versus kind of taking it on your own as a client or a buyer to go out and try to navigate the process on your own, right? Because you have a fragmented market that's almost 26 billion in annual volume. You have all these different banks out there in non-banks, some like yourself that know what they're doing, others allegedly which do not know as well. And the basically kind of being able to advertise or promote the value add of helping someone thread the needle versus taking a shotgun like approach, just kind of boom out there, and hoping it doesn't land with a tier B lender has kind of been the approach that I've been taking.
So the entrepreneurs choosing to work with you are doing so to basically have a guide through the process of obtaining financing.
Correct, Ray. I like to think of myself as a jungle guide of sorts.
It is a jungle out here. So what would they have done like if you hadn't started your firm? Because there's just not that many SBA, lending advisory firms out there. Would they just be talking to multiple banks and trying to figure it out that way?
Talking to multiple banks, non-banks, lenders, trying to suss out, who knows what they're doing and who does not. I get calls every week, as I'm sure that you do as well, Ray, from people that are talking with different SBA lenders out there that are telling them things that may not be the case, whether that may be, say a partner buyout deal where it's eligible for not having to do down payment based on the debt service coverage and the deal structure and the specifics of the SBA SOP, and a bank kind of gives them bad information that they go off of and they're stuck 3 weeks in underwriting. But I don't want to go down a rabbit hole.
No worries. So like that's the type of stuff they're coming to you with, like, hey, is this true? This bank told me X. Is this true? That's the type of stuff that you're hearing?
Correct. Yep.
And it's sometimes not fully accurate?
Yeah. So a lot of the times, it's someone gets told something. Maybe it's that they have to do a down payment on an expansion, or maybe they're getting told that they have to pull. I'm trying to think of an example here. Maybe they have to put their house on the deal when the equity in the house doesn't meet the SBA requirement. Just very kind of specific things like that. And as you know, Ray, being an expert, not to boost your ego, there's a 590-page long rule book, plus minus depending on the year, and it's written like Latin or Greek, pick your language, and you have to navigate through this if you don't know the process and the program well. And if you're someone that's never done this before, you see this 590-page long document if you stumble across it. And you really need someone that can understand this well, that can help you navigate it. So that's where I try to add value.
Yeah. So in other words, like what you were saying before, some of the banks pawn some of their own bank requirements on the SBA, and then it's confusing for the market because they're like, well, my bank told me SBA requires X, and then a lot of the times it's like, no, actually that's just that one bank.
100%. Yeah, it's
got it.
It's kind of aggregating the bank internal policies in aggregate with the SBA, and basically trying to pawn off something that's an actual bank credit requirement and something that's SBA. And then unfortunately, what happens, especially when it may be a bank with a sterling reputation in the market, people just think the wrong things and they get confused. So.
All right. Well, I wanna get back to how you're connecting with these folks, because I think you said threads, which it's like long posts on Twitter, or like a long post on LinkedIn, which it wouldn't be a thread, but whatever, same type of thing, like long form kind of written content. You said GIFs.
Yeah. So I post GIFs, GIFs, kind of out there, like someone running through like a minefield. There's like a guy in a costume running over like landmines exploding all around him. And
it's like jokes.
Yeah, like, this is stuff that can come up in due diligence, or like these are just things that get people's mind thinking, like, this is stuff that's out there, and it's more engaging than just something that's kind of black and white. So like the SOP.
And what was the other thing you said?
GIFs.
Threads, GIFs, and
videos, GIFs, threads.
Videos. Okay, so just content.
Just
so you're putting out content.
Yeah. Just trying to throw stuff out there and just seeing what sticks. And once I find something that sticks, then just kind of expanding with that. If that makes sense.
And I know you post a lot, and you're very active. Every bank has a social media presence at this point. Every bank has a LinkedIn page. A lot of them have a Twitter, but I am confident that none of them are originating this level of SBA volume through their posts. So what's the difference between like the type of content you put out there versus the typical banks? Like, why do you think yours is resonating and attracting these types of folks, but the banks that the content they're putting out there are not?
Honestly, Ray, it's just better. It's better content. It's more engaging. It's not as dumbed down and kind of like, having the spice taken out of it, right? It's like when you have plain rice versus rice with soy sauce or rice with hot sauce, you're going to want to eat the rice with hot sauce more. Just kind of using that analogy or metaphor, it's just more interesting. So I've had people reach out to me from like former NFL players, professional athletes, a personal physician of a Fortune 200 company, just anyone and everyone, like investment bankers that have $10 million in the bank, just all across the board, Ray.
I mean, that's the power of social media, I guess.
Yeah, sometimes it causes good things, sometimes it causes allegedly bad things. But yeah, kind of back to your questions, Ray.
Right. No, there's definitely good and bad that comes along with social media, but that kind of is, if you listen to the old episode, and maybe we'll put a link to it in the show notes, you're wanting to get out into social media wasn't that one of the reasons you kind of left that last job? You wanted to, explore social media a little bit more, but they were just because of the banking rules, like it was a little tighter to do.
It's one of the things that comes, with when you're a publicly traded bank, you have investors that you are liable to, that you have a fiduciary duty to kind of uphold your presence in the market. And kind of back to that, yeah, that was the reason I left, is I wanted to put my opinions out there in the public domain that I thought added value to the SBA marketplace, without filter, kind of without having them be dumbed down. And that was kind of the impetus behind leaving.
Okay. So then talk to me about when you do bring on a client, like what's your style of kind of managing the transaction or the deal or the loan or whatever you want to call it? Because the reason I ask is just because I work with a lot of loan brokers, financial, loan advisors, whatever we're calling them today. But on one end of the spectrum, really like to control things and barely even want to have the bank talk to the client. And then on the other hand, it's like, here's a name and the number and, go run with it. Like, where do you fit on the spectrum of loan brokerage?
Yeah. So it kind of starts with pre-flighting the deal, before introducing it to a lender, and making sure that it debt service coverages adequately, and that the structure that they have before they submit the LOI is, a metaphorical dog that will hunt, if you will, versus one that won't. But get back to your question, being involved through the whole life cycle of the process as closely as I can, before they go and get term sheets or go under LOI, all the way through the process, from term sheet procurement or obtaining a term sheet from someone like yourself, through underwriting, through closing. And I have specific people on my team that kind of help with that whole process, from a guy that does outbound lead generation, to an underwriter that builds the lender model or lender deck, to a closer, if you will, that kind of oversees the process, almost mirroring the SBA kind of bank process.
Okay. So you are building out your team. It sounds like you're actually bringing on like employees.
As my attorney would have me call them, Ray, they're independent contractors. So they're, I like to call them team members, Ray, if you will. So they're based in the Philippines, and this is another tangent we could go down. I am working on putting in the equivalent of a Ford factory in the Philippines. That's gonna be like nothing this industry has ever seen before.
Yeah, well, yeah, I would like to hear more about that. Wait, so the Philippines? All right. What are these expansion plans?
Yeah, so I have 3 independent contractors or team members, if you will, Ray, that have just been absolutely kicking ass and taking names. One guy that's brought in 2 opportunities that are in pre-underwriting now, and if both of these close, he will essentially pay for himself for the next year and a half. And essentially, I need horsepower, Ray, so I can build out my assembly line. And I've decided that the Philippines are a good market because the people there want to work very hard. They speak very good English, and they're honestly dedicated. And I'm working to basically build out an engine, if you will, metaphorically speaking, whereby I kind of have pods of people doing different jobs or roles or as independent contractors, and helping kind of take the metaphorical car of a deal down the track. And I'm basically going to have different teams doing different things there.
And that's kind of your vision to scale your business.
Yeah, and I have a vision, Ray, to eventually do this domestically on the the lead gen side, like 1099 people that will go to local chambers of commerce and such, maybe trade shows, maybe places where, the networking events you would go to. And I will have my highway or my Ford factory, metaphorically speaking, in the Philippines, and I will rent my toll road to these people, and I will run cars down my track.
Very, very cool. So I mean, it sounds like you've just been running. I mean, have you been facing any challenges? Like, what's the biggest challenge you've faced throughout all this starting a business?
In all honesty, I mean, kind of like with anything, sometimes when you're trying to scale something, you have people that allegedly like to take pot shots at you and such, and that can pose a distraction. So there's been that. There's been trying to manage the volume side with the horsepower side and trying to decide when to say no and when to turn something away. There's been trying to strike a work-life balance, both personally versus doing this. I naturally have a tendency to be a yes man. I like to take more on than sometimes I should, and sometimes that can cause growing pains. Other than that, I would just say anything that goes along with, being a small business owner, from managing things like your accountant or like those types of things, and just all of the various administrative tasks that go along adjacently to that.
How do you decide what lenders to bring on to your platform?
Yeah, right. So I like to work with people that are proven, either like yourself, that have been doing this for some time, because every deal that goes through my pipeline or get down my track, I have my name signed to that deal, and I have my reputation riding on the line with it. And if it's someone newer, that's fine, as long as they're at a good institution, and I know it's someone that means well, they want to do well, they care about the deal. They have kind of the support team there. So I have some newer people that I've talked with, but essentially I need to have cars get from point A to point B without roadblocks.
Well, it makes sense. Every lender is different. By the way, before, you came into this, a lot of the folks out there were running parallel paths with different lenders. And I'm just curious what your thoughts are of that, because I understand it to a certain extent, because if you are a small business owner, you have heard the horror stories of some of these transactions going down the road with the wrong lender for, a month, 2 months, deal doesn't go, now you're stuck. So you hear that over and over. So you said, well, maybe I should run parallel paths. So what are your thoughts on that?
Yeah, right. So my thought, honestly, is the break point or inflection point from which you switch of interfacing with potentially multiple lenders to going down the track with one lender is at the point in time you go into underwriting and you sign the term sheet. Essentially, I kind of think about it analogously or metaphorically, to getting married, right? Like when you walk down wherever it is, the aisle, you put the ring on their finger and whatnot. At that point, you're married together, right, at the hip, unless something should come up in which the divorce takes place. That's my viewpoint towards it. I know others may disagree, and I view it this way for a couple of reasons. One is the monetary aspect, and just the respect from a time aspect is that they're putting in resources, they have their team on the clock, you have your people on the clock, there's going to be the deposit that goes along with getting the commitment letter going, or the getting things like the valuation going, potentially the appraisal, putting an attorney on the clock and such. And it's just a lot of time. So to be doing that with multiple people, it can really irritate people and rub them the wrong way.
Well, I mean, and there's ways to avoid your deal blowing up at the 11th hour. If you just work with someone who has a proven track record, I mean, that mitigates, 99% of it.
Yeah,
right?
Absolutely, 100%.
We have to talk about, I think, one of the most, I'm going to call it genius marketing ploys I've seen lately. Do you know what I'm talking about?
The full standby hat?
Are you wearing it?
Yeah, of course.
Let me see it.
Of course, brother.
All right. Tell me the origin of this.
Yeah, so I like to educate the marketplace around optionality of what you can and can't do. And I posted a thread on Twitter to educate people about the full standby structure. and there was some interaction on said thread that really kind of struck a chord in which lots of people became very interested in the structure. And it was one that many people in the marketplace, specifically ones on Twitter, did not know was allowable based on sterling banks that do not do that structure, or just kind of only under selective circumstances. And I just kind of found it as a good break point to marketing, getting people excited about being able to afford a business they may not otherwise be able to afford. You're looking at, say, $1 million use of funds chart thing is inclusive of the purchase price of the business and other costs. And say you have $50,000 to deploy versus $100,000, all of a sudden you can go from being able to afford a business that you thought you otherwise couldn't have, not having to dilute equity. It's just a game changer, right? Honestly, it makes no impact on the debt service coverage. It helps the investors get better returns because you're magnifying less equity on the same kind of economics chart. You keep the seller motivated because they're kind of on the line until it gets paid off. You can include a clause in the note basically saying that at the time the SBA loan gets paid off, it comes due. You can help them save allegedly on federal capital gains taxes, since they pay taxes based on the amount of the consideration due at closing. I'm not an accountant, allegedly, so consult with your tax advisor. And you can also essentially, the seller will end up getting more money via the accrued interest on the seller note, allegedly, should you be making your payments as you should be. So,
what is with all the allegedly?
I am currently in the process of going through some potential stuff, Ray. So I'm just trying to qualify or quantify things.
Okay, no worries. I just had to ask.
I'm just trying to be funny too. So.
So, but the beauty of that marketing plan was that you identified that you did strike a chord, and you then leaned into it and you printed hats. And so how'd you tell me about the idea of designing printing hats, and then who'd you give them to?
Yeah. So the hats thing, I thought, you do t-shirts, RFSB lending, people do golf towels, there's golf balls. I just thought I liked the idea of the hat because the hat is something that's visible, right? Like if you're wearing a coat or a jacket,
on Zoom.
Yeah, if you're wearing a coat or jacket, you can cover that up. Like you could have a shirt, it gets covered up. Hats are something where they look cool. You can wear them on the golf course, you can wear them on the beach, you can wear it at the closing table, and essentially it's just an iconic thing. I was at I hand them at conferences. I've shipped them to Puerto Rico. I've sent them all over the country. It's an iconic thing. I was at the UPenn Warden ECA conference a couple of weeks ago, back in March, and I had a guy walking around with my hat, and it was like I had a billboard in this room with over 100 people. Is something else.
That's fun. Did you give them your hat there, or did they just happen to be wearing your hat?
I gave them the hat there.
Okay. If you don't have a hat, are you even an SBA lender at this point? I mean, everyone has these hats now.
No, I have one. I don't know, Ray. I get DMs from SBA lenders asking for the hat. I'm gonna have to keep printing more of them. So
it's probably your biggest expense line item at your company.
Currently it is. Yes.
That's funny. Good, man. Well, that's awesome. And that's the type of stuff that it's kind of just, it works, and it takes a unique person to be able to identify, things that work from a marketing standpoint and doing it and then, developing business from it. So that is interesting because, again, going back to your background, throughout your 20s, you were a closer, working at a desk, closing loans that were brought in by other salespeople. And you left that somewhat abruptly. You were only there at that last bank for, I think, a short period of time. And you did not have that idea to go be a broker, and start a company until, probably, I feel like it was developed quickly, and then you acted on it. You had no network. You just jumped into it. And no one knew if it was going to be successful, but here you are, and you've closed $14 million last year, all SBA, right?
Yeah, all SBA.
and now you're scaling your business. So how is entrepreneurship been treating you? How are you feeling with, everything you've done?
Yeah, it's been really good, my friend. I mean, I currently have about 20 million in my pipeline now that I'm trying to hopefully close here in the next 2 months, plus or minus. It's been better than I've ever anticipated, Ray. So I really enjoy having the flexibility to kind of set my own hours, work with whom I want, when I want, and just being able to work from anywhere.
You're living the dream.
Something like that, Ray. You are too. So
yeah, good, man. Well, I'm happy for you, and I wish you luck. I will leave your information in the show notes if anyone's interested in, connecting with you, your Twitter, your, whatever we want to leave, website, email. And that's it. I appreciate you coming on.
Hey, thanks for having me, brother. I'm looking forward to getting some more deals across the finish line with you. Hopefully soon some of my track.
Absolutely. All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.